price, I mean, it retreats 1%, but that doesn't really matter, does it? Because we went back over $100 a barrel, up by some 38% in the month of July alone. Not $120 short, but back over 100. I was reading on the Markets Live blog yesterday, one of our colleagues talking about a focus on the Yanbu export terminal in Saudi Arabia, that's going to be the area to watch. What are you watching when it comes to energy prices and the hold that this narrative has over other assets?
Yeah, I mean, in terms of where we go from here in oil, it's an element of a guessing game. You've got to map the reaction function of President Trump against Iran, against Israel. But in terms of the tenor of news flow, I think, directionally, risks obviously tilted to the upside. And I think, as my colleague Michael Ball put it yesterday, for risk assets, it means that macro is now back in charge with Brent above $100 per barrel. I think futures, they've been holding it up relatively well today, but, let's see what happens. Do we kind of see a return to this conflict trading pattern whereby risk gets pared down into the weekend? That's what I'm looking out for. And I think also, during the conflict, we saw tech act as an offset for some of the energy angst. But clearly now that's not happening. Alphabet, that was a disappointment this week. We've got more hyperscalers due on deck. Intel, they reported yesterday, they've not really had a material impact on the market, even though their earnings are pretty solid. Then overnight, we saw some softness in some of the Asian chip stocks, on which we've got Samsung and SK Hynix releasing earnings next week into an index which basically trades vol on an 80 handle. So it does look like risks are potentially tilted to the downside for stocks.
Oil got Christine Lagarde to sound hawkish again yesterday. Is it going to get Mr. Walsh to sound hawkish as well next week? This is the question that everybody's... how big an impact is this going to have? The bond market is moving aggressively at the moment to start pricing in rate hikes for the Fed. When do we actually see that translating into reality?
Yeah, I mean, this is the absolute big debate in the Markets Live IB chat yesterday. There's a lot of factions on here, but clearly the decision is a lot more finely balanced than it was a few weeks ago. I think the key for the market now is ultimately the Fed have reaffirmed their commitment to inflation fighting, and now there's an increased expectation they could potentially move next week. I think the problem for the market is we're in the Fed regime where forward guidance has been pared back dramatically, and that's what the market's really contending with. Next week's going to be a lot more of a high vol event than it potentially would have been, owing to higher energy prices and the unknown reaction function that we have at the Fed.
We're going to get PMI data out of Europe today, Adam. It hasn't broken yet, but when it breaks, are we going to have to think of it as too backward-looking, given the big ramp-up in oil prices that we've seen just in the last week or so?
Yeah, that's pretty much my take. I mean, yes, it'll cover, some of the fallout from the breakdown of the MOU, but it's just such a fast market at the moment that any piece of data that gets released feels relatively stale. None of it's going to capture the ramp up that we've seen in Brent. Potentially the final releases will later in the month, but ultimately it's such a fast market. We're monitoring what we're hearing from central bank officials. And in terms of what we heard yesterday, from officials in Frankfurt, it merely just validated what we're already expecting. The ECB, they're going to probably move in September. What happens beyond that, is anyone's guess. But in terms of central banks as well, things pick up next week. We've got the BOJ, that could be the FX story of the week next week. Do we potentially see a move towards 165? And do the BOE stay dovish?
Lots of questions. We'll get some answers.